Good morning, everyone, and welcome to the European crossover webinar. And let's go and take a look where we stand here with the euro and see where that stands at this moment. It's a little bit lower, just a tad bit lower than it was yesterday. We did have that push on Friday, and then on Monday we just kind of traded a bit down. Yesterday pushed up a little bit. Is that yesterday pushed into what we had our key level, which was at 2177. What was our resistance at the time? But we talked about that, or previously I talked about it was key to not close above this bar, which was 21. I believe it's 77. I believe it is, and we did get up, just barely got above. We did not close. We faded from there, and today we're just a tad bit weaker. Let me take a look where we stand as far as the news. Coming today, we did have UK business investments. That was a couple hours ago, and UK construction output, as well as GDP. Let's take a look. We stand here with the cable. Actually, relatively quiet right now at the moment. So we've been seeing this range kind of push out a bit. And then a couple hours ago, we did go and get German CPI. Once again, the euro is just down a little bit, as well as French CPI. And let's see, as we roll into the States, we will go and get CPI. That's going to be out at 8:30 Eastern. And other than crude inventories, that's going to be it. ISM New York business conditions at 9:45 Eastern. But now it does look like we have another Fed speaker. Clarita is going to be speaking. That's going to be at 9 a.m. Eastern. But key news for today, economic data is going to be the CPI at 8:30 Eastern. We'll go and take a look where we stand here with the indices. We did see those indices. We'll take another slide yesterday, although they recovered. We took another dip, and we're pushing back up again. Bear with me. No, we did take that. See that slide yesterday, and let's go and switch this to the. We saw that move in the Nasdaq as well as the S&Ps yesterday, and actually looks like we took a pretty good dip. Say overnight. We had come up here and we're challenging that 4150. We slid right back down again. You can see here, wow, we'd actually dipped down the S&Ps down here at 4114, and we've seen a heck of a rally back. You can see here as the Nasdaq is somewhat diverged. Yesterday we came in and we put the low right in the get-go. You can see here in the opening range, and you can see that divergence because look at how the S&P had vacillated back and forth, even in the afternoon, dipping into the opening range. But you can see with the Nasdaq, it continued to go and remain pretty steady, well above the opening range. Never really came back down to it. Even in this breakdown here in the S&P, where we came down here to looks like about 4112, we are 30 points off of that, 30 handles off of that low. You can see here, still the Nasdaq didn't even come close to its opening range, and we're still pushing up higher here. Saw a nice recovery yesterday from those lows. We did dip down as low as 4106. I shared that in the chat. This is a pretty key area here. And actually, at the time, I remember clearly is that the Nasdaq had made new lows here, but the S&P didn't. It ended up holding, and we, were able to shoot up rather quickly as we made it all the way up here to 4167. So I knew that, and I had that from back then when I put holding above the 4106. Well, you can see yesterday we actually took that out, and I thought that was going to be the case. I thought, but potentially, when we came down here, we'd actually put in a low. We had support around 4113. We came down there, we dipped down to 12, then it pushed a little bit higher. Then we came down and went as low as I think 4109 and 3/4. I remember that being a low before. And it looked like there's gonna, and I think we moved up to like 17 or something like that, 15 and 3/4 or something. And we started to slide back and thinking, you know what? I think thing is going to go and slide. I actually took a short as it started to act like it really wanted to gun some stuff. I'm thinking it's going to gun some stops to go down there to that 4106, at least towards 4107. So I actually got short and then actually did break lower. And then I actually got long right here. And I just wasn't sure if we are going to break even further. But had it not been so, this thing was falling apart all from the Asian session previously, all through the European session. And, but that was, we ended up rallying quite nicely. Look at that. We put in a nice hammer too. So unfortunately I didn't stick around on that very long. But my point is we came back down here again. We'll see if we can't push higher. I do have our resistance for later. I mean, not later, I meant for a little bit higher. Coming, I think, around 4170. We actually came back about 4152. We faded back in Asia pretty good. We'll see what happens today. Kind of been all over the place, to say the least. One thing I did want to go in reference, I made a reference to that yesterday, as you can see here, regarding the opening range. We've spoken about it at length before, so I don't want to spend a lot of time on this. But I will go in references. I think Steph asked about it, and Didier said that he was curious about it. We had covered it somewhat at length about, I think, almost a month ago, if I remember correctly, or just about a month ago. But the opening range is going to be it's been around for a while. I came aware of it from another. It's an experienced trader who uses that opening range, and I also used it for FX, but I adapted a little bit differently. The opening range actually takes place, and I said this before, it sounds a little bit nuts, but that opening range takes place in the first 30 seconds of the futures open, or basically it's the cash open for the indices. Actually, you can use the opening range. It's actually used for crude oil, for gold, but it's used in that first 30 seconds. It sounds kind of nuts, but you'll see, tens of thousands of contracts go off the board at that time. You can see right here. You can see here as this thing just jumps up. If you were to split this, let's say in the S&Ps to the 5 minute, goes back. So you can see, look right here. And that 5 minute thing, you get 69,000 contracts go off the board. That's in 5 minutes. So you can see in the first, right in that 5 minute bar, and actually get that for you. 74,000 contracts go off in that 5 minutes. So you can see the first 30 seconds, you see quite a bit of the fly off right off the get go. So not generally, but what ends up happening is, and you can see here with the Nasdaq also, once we get above the opening range, it basically almost looks like a momentum type breakout. And you can see as the market breaks above, and what you're looking for is as the market comes back to this opening range, you still want to stay long, and you don't trade it just strictly in the sense that I mean, if it's above it, I'm long. If it falls back in, I'm out because you'd end up getting stopped at. You want to take it in accordance with how the market is trading. So as we start to break away, you can see here, right from the get-go, they break away. So once we get above that opening range, you're looking to be long. You may not want to say, well, I'm not going to chase it, especially with something like Nasdaq. But as it breaks back, you're thinking, I still want to be long. We break back, and you see this is going to be support, the opening range high. You can see the market does hold here. You still want to be long, so you may get long right in here, especially if it, and this is only a 30 minute. Let's go and flip this to a 5 minute. And you can see as we come back down here. So you say, okay, well, I'm comfortable now being long now. I want to be long here. We're holding above the opening range, and we start to take off. We see a pullback, and as we, you keep on going along the opening range, you'll probably have areas where you may start to take profit, depending on what instrument you're trading. Obviously, the Nasdaq's more volatile than the S&Ps, so you want to make that an important start. A lot of times with the S&Ps, the rotations are going to be like a lot. Obviously, it sounds like nuts because right now we're trading so big in here. But generally, you see rotations in the S&Ps of a little over 4 handles. So if you were trading multiple contracts, you might take profit close to 4 handles. The next profit on another portion of yours may be closer to 8 handles, and following the next portion may be closer to 12 handles. But as long as you're above the opening range, so lots of times you'll see throughout the day, going and rotate back. Now, one of the things that I was mentioning yesterday, I'll flip this back to a 30 minute. And sometimes you'll see a choppy type range. Let's go back in here on this S&Ps. You can see here as the S&Ps, there was no, as we got into the opening range from the get-go of the market, you can see as it breaks back below the opening range, then that gets you short. And you can see right here, as we break below, now we're below the opening range. Now you're going to end up going short. You can see right here, it's 41.27. We just start breaking lower until we get down to 41.05. Now, you can see yesterday, it was a real whippy day because generally what you'll see is as you rotate back, you'll see the opening range. If you're short, then the market will start to, you'll end up running into resistance as you get back towards the opening range. The market may come back down here and come back again. If we can move back above it, which we did, opens the door for us to move higher. Yesterday was, I don't want to say it was an anomaly, but with the downside pressure, you can see how this market, although it was excessively, you have to think about this. When this opening range opened up here, that was essentially, you were trading between what, 41, and I think it's like 41.28 1/4 to 41.34 3/4. You were essentially, not essentially, but were 100 handles from the previous day's, area where they were opening up at. So you can see the amount of, the back and forth. Okay, is it oversold? Is it going to go on and push more? But what you'll find out, and try and pull this further back. I'm not sure if I can have those now. But what I'll generally do is I'll go in and keep the opening range from the previous days now because we've broken so far out that it's almost like an anomaly. I'm not an anomaly, but we're so far away from the highs that we just set, like on even Monday, is that we're so far down. But generally what I like to do is you'll see here these dotted lines. I'll keep the opening range from several days. And what lots of times you'll see is when the market rallies higher, and this is so far away, it's not going to be of any value now. But as it moves in between these opening ranges, you'll see the market pull back and test that. We'll take a look at the euro dollar. I was pretty busy yesterday, so I didn't have time to work with it at all. But you can see here, here's those opening ranges. I haven't actually color marked per a day. So here's a pretty good example here. This was actually last week because I have the opening range here in red right here. So good point here is you can see here as we open up an opening range, we break lower, and you're going to be bearish. Okay, you can see this. Hopefully, you can see that clear. On the opening range, we break lower, and as we break lower right here, you're going to be short because we came down here. You stay short now as the market rallies back. Where does it run out of gas? You see it right here right here in the, go mark this for you. I'll actually, when I'm on the day that I'm trading, I'll have it in the wider bar. This way, I don't have a whole bunch of days where it's all over looks like it's all over the place. I can't have it all over on my chart, marked up in big. Put it 2. Hang on. The difference is with the Forex, and of course I use the futures, is that I use the first 5 minutes, and it works really well too. You can see here. Here's a perfect example. This is actually, for on Wednesdays I put it with the red. So the market opens up now. Once again, I'm looking at a 30-minute. Generally, it's going to base on the first 5 minutes, but you can see this allows you can see more clearly. You see as the market breaks lower, it opens the door. I want to be short because we're breaking lower. Okay, we get markets a little bit overdone, depending on how far it's pushed back. As the market rallies back, you still want to be short. Look where the market runs into trouble, right there at the opening range low. So you'll see this is where if you end up trading long, where you expecting on some to say, hey, look, I'm looking for the market to get a little bit weak. We're into the opening range or approaching the opening range low. Sure enough, take the profits if you've gotten long. Once again, we're looking at some analysis, let's say on a 30-minute and 2-hour. This area happens to be a good area. Well, if you're short, you're covering. And you can see the market goes and backs down. We rally back. We get into the opening range, inside the opening range where you're going to be neutral. But notice how it cannot get above the opening range. So really, you're still looking. Once again, you want to go and look at it from a perspective like, oh, it's been down all day. Well, maybe we're looking on a 2-hour chart. It's been negative. So you're still going to play the short side. As you come back down and we break below the opening range low, once again, it kicks it into low, and you can see as this market takes off to the downside. Same thing, the market starts vacillating today, and as we get into Asia, where does it run out of gas? Pretty close to the low of the opening range. We once again lean back down to the downside. It stays that way. And here, I think on my dark green, that's going to be on a Monday, but you can see here how the market traded. Once again, like I said, I've been real busy with. I was working a new platform, which I've had some issues with, so I have not been able to spend much time on Forex in the European session. But I wanted to go in and touch on that. One of the things, as I told you before, that I like to go in and do then is, and I think let me double check something real quick for you. Yeah, Friday is purple. So you can see here's Friday. What the heck this is? Okay, and you can see here how the market has taken off right on here. Notice how the market, when it comes back, and that's why I like to keep these over the course of a few days. But like I said, generally, so I don't have the whole thing all over the place. I'll go on in, do it like this. As I mentioned, with FX, what I'll do is I'll use the European Open, and I use the first 5 minutes. So you can see here's Fridays. Now notice as market comes back, where does it exactly the market stops at? Stops at exactly the opening range high from Friday. You see, that's what I'm saying. I like to keep these on here. Here's today's opening range here with the euro. Okay, first 5 minutes. But once again, we're looking at a 30-minute chart. But as I mentioned before, is I'll keep these because you'll see the market a lot of time, quite often, revisit the opening range from several days ago. You'll end up finding, let's say, on a sell-off, you end up finding support. So if I've tried to play this from the short side, or maybe I came in a little bit late and I'm trying to run this thing. I'm thinking, okay, there's probably not a whole lot left. Oh, wait a minute, it's coming into the opening range from Friday. And as we moved into the market, was yesterday. I marked off Mondays, but in yesterday we're coming in like, okay, now you know what, they're falling back. Hey, that's the opening range from Friday. They're probably going to find some buyers, and sure enough, it actually stops right to the tick. Obviously, we're using the futures right to the tick, and then we start to run. Of course, you can use that with the cash. Now, the good thing about the opening range is you could have just used it against the euro cash, as opposed to the futures, because it's not volume based. So you can use that. Like I said, I use the first 5 minutes of the European Open, as opposed with the indices. It's actually the first 30 seconds, whereas, like you said, you saw that on the 5-minute chart, 74,000 contracts go off in just 5 minutes. Probably within that first 30 seconds, probably would have seen about close to 20,000 contracts go off the board. That's why it's so key, that first 30 seconds. But that's just too short for Forex. So I use the first 5 minutes of the European Open. But you can see here's today's. You can see here, we try to break above it. The market can't do it. We get a little, and this on a 30-minute, when we break and we press on here. Once again, you can, if you're not, you want to take it with, generally you see a breakout, but you want to take it with some, try to think of the right word, but if you were to jump in and out, just because it jumps up out, you can chase it as we break out, because it breaks out, you'll see this market start to take off. You can go with that break. But once again, like I said, if we start to slide back, lots of times, depending on the type of day, I'll go in and let this thing play into itself without just immediately going long or immediately going short. You can see we broke to the downside, but the market, as I said, has been quiet today. So it's been kind of vacillating. Even yesterday, we didn't see any big movement. So I'll take that into consideration. But quite often, like I said, I'll use the old previous day's opening ranges as areas in case the market does either break to the upside, to the downside, as to where this market it could potentially go to. So I hope that helps explain it. With these huge moves we saw in indices, it wasn't as, I won't say not as helpful. What I did see here was in the Nasdaq yesterday, and showed me one of the reasons why I ended up playing the Nasdaq for the long side, came in a little bit late. One of the things I've looked for, you can see even in Asia, was that the Nasdaq, as you look at its opening range from what we saw in the S&Ps, told me, hey, this market's a lot stronger on a market-to-market basis than, let's say, the S&Ps. But don't forget, the Nasdaq had been getting whacked for about 4, maybe 5 days prior to the S&P. So I think it's well overdone. And so once the S&Ps want to turn, generally we'll see a nice little move here in the Nasdaq. Anyway, enough of that. Let's just go on and get into the analysis. Just want to go on and explain that. Okay, Amira wanted to look at platinum, palladium at the start of the market or in the first 30 minutes. Yeah, we can do that. We'll start with that, Amira. No problem. So let's go to that. Bear with me. And sorry, but I had already told people that I was going to look at, we would look at this opening range. So that's why I didn't get to your question. So let's go and take a look at that moment. So let's take a look at palladium. You know how we've been sitting here at this, well above this 161% extension right here with palladium. We're actually looking on the daily chart. We had fallen below that 161%, but the market came back strongly on Monday. And then here we are on Tuesday, bit of a doji almost. And now we're just trading quiet. It still remains the same. The key is going to be a close below 28.96. 28.96. That's going to be that 161%. Immediate support is right there at 29.15. But the make or break right there is a daily close below 28.96. and kind of holding our own in a relatively quiet session. Let's go on and move on to the platinum. And platinum's interesting. We finally got this move higher, but what did we do? On Monday, we posted this gravestone type doji right here. You can see yesterday, we actually saw some follow through selling based on that bearish formation. We saw this market push and break below the 1215 area. We got as low, actually not 1215, 1220, I meant to say. We got as low as 1215.80, but we came back and held, the market held above this area, and you can see the significance of 1241. So we got to hang on there. From a short-term basis, it's critical where we're at right now, that we close above 1241, and we're just right there on a very short-term basis. But this is a bearish formation, so we'll see whether or not the market can hold above. On a short-term basis, got to close above 1241. On a medium-term basis, then that's going to be it right there. It's curtains right there if we get a daily close below 1205. Okay, with that, let's go and move into the euro. That opening range didn't look so pronounced, like I said, as you're seeing with the indices, because of the huge move we've had over the last couple of days. I mean, like I said, when I was pointing out the S&Ps, we literally were opened yesterday 100 handles what we were for the day before. So you can see any chance of rebounding to the prior day's opening range. You're going to see, we weren't going to see that. But a lot of times, like I said, I will, where I find my opening range or using the opening range more effectively is not only using it in context of where it's at on that given day, but when it rebounds or fades to other prior days' opening range, that's so key. Lots of times where you'll see where the market will gravitate towards as a magnet. But anyway, let's go and move on. So the euro posted a gravestone doji on Tuesday, closing above 21.31. You can see that right here, although closing above 21.31. Resistance will be 21.77. Here's that where we were yesterday, with support remaining the same at 20.96. Well, we're just trading in an exceptionally quiet day, just quiet as all get out. So let's go on and update this. 20.96 will be the same. Difference is resistance will be 21.77. Now the market is still open, as we said at the beginning of the week, to push even higher at this point. So it's actually holding up relatively well, considering we've seen risk off, which may bode for this to eventually move even higher. You would have thought that this would have pulled back somewhat after the equity losses we've seen of the last couple of days. Let's go on and move into cable. So cable closed with a doji on Tuesday at 41.37. Resistance will remain 41.80, followed by 41.42. Support will be 40.72. Wow, this FX is trading quiet as all get out. And that's with some UK data. So it's going to remain 41.80. If we were to go to a new high, it would be 40, and I put 41.42. That should be 42.42. Just for clarity, let's go and mark this off. Yeah. And support 40.72. Still trying to push up in here towards those highs, but strained ranges. Let's go and move in now to the Aussie dollar. So the Aussie closed with a doji following a negative close on Monday. Resistance will remain the same, 78.77, with support at 78.02. So yesterday had a doji following Monday's close. And Monday we pushed them hard, but obviously Monday's when the wheels started coming off the caboose in equities, and we faded back. And then we closed with a doji yesterday, but a positive doji. But we're seeing some follow through down here. As we mentioned, support will be 78.02. We've actually fallen below that as low as today. We came as low as 77.87. So we got it below that, but I still had 78.02, 78.77 on the upside. We're going to keep it there. We did dip below that, and that actually is a support. That is a level. I won't say a level. I don't want to say a support level. Our support today was 78.02, but 77.87 is a level. We're trading just above that bias chart support by 2 ticks. We don't need this anymore. Obviously, some sympathy moves with this risk we continue to see. Let's go and move into the dollar yen. This has really been quiet. Look at this. Just basically back to back, almost back to back dojis here. So the dollar yen finished Tuesday with a consecutive daily doji, albeit a negative one. Resistance for Wednesday will remain the same, 934 on the upside and 828 on the downside. And we're just trading quiet as can be. So 828, 934, no changes. Let's go move into the cash dollar index. So the dollar index posted a negative doji in a surprising restrained range considering the sell-off in equities. Support remains 89.70 with resistance at 90.67, and we just haven't seen a whole lot. We did push higher, but like I said, the reason I have this pushed out to 90.67 is because anything up here doesn't make any difference. It's all sell, sell, sell. We don't find real resistance until we get up to 90.67. So that's why I have it. If it seems like it's pushed further, like, wow, it seems like, let's give an example here. Wow, it seems like resistance should be that low there, which you can see that stopped it right there at 90.42, which it did. But my take is, you know what? Everything's a fade. You don't really see any real like, whoa, let's see what happens. Not until you get to 90.67. That's my point. Why I have it at 90.67. But yeah, looking as market rallies up on a short-term basis, it would be this low. That low happens to be 43 and 90.43, and it looks like the market ran out of gas, just about one tick for there. But as I mentioned before, no changes here. We don't really see any real fight. It's bearish. There's no doubt about that. It's bearish. So we don't even start to see this market start to get a little interesting until it gets up to 90.67. Hence why it seems to have pushed it like, wow, shouldn't it be 90.56? Well, 90.56 is the level, but we could go up there. We could even tag a couple of pips or ticks before, but it doesn't get interesting until it gets to 90.67. 89.70 is going to be support on the downside. That's where some key support comes in. Yes, we're trying to defend this 90, but once again, things get interesting when you get down to 89.70. Now let's go and move into Bitcoin. So Bitcoin traded in a restricted range on Tuesday following Monday's sell-off. Resistance for Wednesday will be 57,880. Wow, looks like it barely got above that. Hang on, not barely, but looks like it ticked off around 58. So the high was, Oh, not bad. The high was 57.91, and I put 57,800 with support at 54,062. So actually, pretty nice move for today. And 57,880. Okay, now let's move into the suppose. Well, we're kind of rotating all over the place here. And this is heck, this is even on a 2 hour right here. So the S&P saw a continued sell-off on Tuesday that challenged the April key level of 4106. We discussed that. There's the 4106. Before recovering to rebound to 4152. Resistance on Wednesday will be 4173 with support at 4123. We actually got as low as 4112 here, and we bounced right back. So one heck of a day, although 4123 is pivotal. Now we have seen a pretty good dip below the 4123. So actually what we're going to do is, you see right here, this bar, this open, that's a 2H, not like it's a 5-minute. Let's go right there. That bar is at 4118 and a half. Let's just call it 4118, because we do want to take that into consideration. But we're going to still leave this one. I put, well, 4173 seems like way out in Venus at this point. So we'll go up to 4167. That will be an area where that is a pivot. It's a huge pivot right there. But I thought, considering how we closed yesterday, we could push maybe kind of vacillate down here to maybe the mid-30s at most, and then have a chance to push even higher. But wow, we're really keeping the pressure down on this. So let's go with 4167 for the resistance. Moving on to the Nasdaq. And here's a Nasdaq on the 2-hour chart. So that's a 30-minute down here. Okay, here we are on the 2-hour chart. Once again, have to open these up considering the big moves that we've seen so far. So the Nasdaq surpassed the target of 13,150. Here's my target yesterday. I won't say it's target, but this was something else. I didn't think we were going to get down. I thought that we were going to move down to, I think yesterday's bottom cut support was 13,186. And I thought, okay, well, we're probably going to come down here and eventually we'll come down to 13,150 before we can see a bounce. Heck, we hit that 13,150 right out. We slid right through 13,186 on its way down to 13,150, and then obviously we pushed lower. But Nasdaq surpassed the downside target of 13,150, bottoming at 13,062 before recovering to 13,370. Boy, what a good recovery that was. Support on Wednesday will be 13,214. You can see right now the low's been 13,185. Considering the Nasdaq, that's pretty close. with resistance at 13,463. So we'll see whether or not we can make it up there. But we're looking at, as I mentioned, 13,214. Did get a little bit of that overshoot, which isn't bad. The overshoot was 29 handles. With resistance at 13,463, that may not come to fruition. But that 13,400 got the 38% of the entire range to up to the highs. 1344 is the 50% of the NFP highs. And this level here, and we do have now a continuous drop VWAP from the NFP highs here. So around this 13.4, we'll see whether or not that comes through for today. Certainly doesn't appear would be the case, but we do have CPI today, so we'll see how that plays out. Next, let's go move into the gold market. So gold paired back to 1818 on Tuesday before rebounding to the mid 1830s. Resistance for Wednesday will be remains 1850 with support at 1814, followed by 1804. So no changes here in gold, and we are targeting on a short-term basis 1877. So support's going to remain 1814, and on the upside 1850. And lastly, with crude oil, so West Texas Intermediate challenged the bias chart support of 64.20 yesterday before rebounding to close the day close to the bias chart resistance, which was 65.50. The bar was a hammer on the daily and suggests downside may be limited over the next few days. Resistance for Wednesday will be 66.19. You can see here we brushed up towards that 66 area here. Got as high as 66, 65.99. But of course, risk is really yanking it down, keeping it lower. We're supported 64.76. We're still above 65 though. So resistance 66.19. And support 64.76. And there's a bias chart. And we'll get that posted in the room, and we'll see you in the chat room. And thanks for joining us here on the European Crossover.